You're listening to AI Prism from Seoul Economic Daily.
It's Friday, May 15. I'd like to share some thoughts about retail investors. What if I told you a massive new wave of funding for the global AI boom isn't coming from Silicon Valley, but from the conservative retirement accounts of everyday Korean office workers? Today, we're taking a deep dive into Seoul Economic Daily reports to see how a single pension reform is reshaping personal finance and the global semiconductor market.
Yeah, looking at where that capital is moving right now is pretty eye-opening. Historically in Korea, commercial banks held the bulk of personal wealth, right? But we're watching a structural shift where brokerages are catching up incredibly fast.
Catching up, like how fast exactly?
Well, in the first quarter, the top 10 Korean securities firms saw their net income jump 114% year over year. We're talking over 4.3323 trillion won.
Wait, so that's roughly $3.1 billion.
Exactly, yeah. I mean, Mirai Asset alone just broke the 1 trillion won barrier for the quarter. That's around $715 million just for them.
Wow. That is staggering for just one quarter. It makes you wonder, how much friction there used to be before this recent pension portability reform. Was it just too hard to invest retirement money in stocks?
It really was. Before October 2024, retirement funds were essentially locked in these conservative bank-managed accounts. If you wanted to move that money into an equity-heavy brokerage, you had to liquidate your assets first.
Oh, so you'd take a massive hit on penalties and taxes.
Right, exactly. But the reform removed that requirement entirely.
So instead of having to sell your car and buy a new one just to change lanes, they built this direct express lane between your savings account and Wall Street. You just merge right in.
That is a great way to put it. People are just merging over.
But if brokerages are seeing this massive influx, is a broad fund like the EWY, the iShares MSCI Korea ETF, already pricing in this brokerage boom?
Well, the EWY does hold significant financial sector positions. However, brokerage earnings heavily depend on sudden spikes in trading volume.
And those volume surges are super unpredictable.
Yeah, exactly. So these rapid earnings tailwinds probably aren't fully priced into the current consensus estimates. It's a potential positive catalyst, sure, but it carries volume-dependent risk.
Which really begs the question of what everyone is trading so heavily. Once people merge into that express lane, where are they driving these newly liberated funds?
Straight into AI semiconductors, honestly. We recently saw 2 different AI semiconductor ETFs, each surpass 2 trillion won, which is about $1.4 billion in assets under management.
2 trillion won. And they hit those milestones in record time, right?
They did. It's moving incredibly fast.
I was reading through the structure of those ETFs, and one detail really confused me. One of them uses a 50% bond blend. If retail investors are chasing high-growth AI stocks, why intentionally dilute it with conservative bonds?
That's because of how individual retirement pensions, or IRPs, work in Korea. An IRP is basically the Korean equivalent of a U.S. IRA.
Right, okay.
But Korean regulations strictly require that at least 30% of an IRP must be held in safe assets like bonds.
Oh, I see the loophole. So by baking a 50% bond blend directly into the ETF, the fund automatically qualifies as a safe asset.
You've got it. It bypasses the limitation totally seamlessly. Investors can put a much larger chunk of their retirement accounts into AI semiconductor growth without violating that safe asset rule.
That's clever.
Yeah, and we are seeing the tangible results of that inflow. It's pushing Samsung Electronics, which listeners might track via its ADR ticker SSNLF, toward a psychological milestone of 300,000 won.
So that's roughly $214.
Correct. And SK Hynix is simultaneously pushing toward the 2 million won mark, around $1,428.
So domestic retail savers are actually moving the needle on major global tech players.
Yeah.
But what fascinates me is that international smart money seems to be shadowing this exact retail momentum.
Oh, absolutely. Hong Kong family offices recently visited Seoul and are reportedly allocating up to 30% of their portfolios to these Korean semiconductor names.
Up to 30%. That is a huge allocation.
It is, but the method they are using is what you really need to watch. They are actively moving away from broad funds like the EWI and pivoting toward direct stock selection instead.
Right, which is a targeted response to the Korea discount. For our listeners, that's the historical undervaluation of Korean equities compared to regional peers, usually due to corporate governance issues.
Exactly. But historically, it was also mechanically difficult for foreign capital to buy individual Korean stocks directly due to complex registration requirements.
Oh, so upcoming foreign integrated accounts are aiming to fix this, right?
Spot on. It removes the bureaucratic friction, allowing foreign institutions to trade directly through omnibus accounts without maintaining tedious individual registrations.
Well, if you are listening to this and wondering why it matters to your portfolio, think about the compound effect here. You have a newly built express lane for Korean retail retirement money, and simultaneously, the red tape is being cut for foreign institutional money. As both domestic savers and global family offices crowd into the exact same AI supply chain, it could inflate the global semiconductor stocks you might already hold. Understanding the source of that momentum is crucial for managing your own risk. That's today's AI Prism, Retail Investors. This episode was produced with AI assistance based on Seoul Economic Daily Reporting and reviewed by a human editor. AI Prism is a 1-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.